CEO of Puravankara, to take some questions on the show now. Abhishek, thanks a lot for joining us today. I do want to begin by starting about just what the demand has looked like, because I'm looking at your Q4 numbers, and while overall sales have been higher, the affordable housing piece has not done so well, right? I mean, I think overall volumes are down around 29% in that part. Can you tell us what's going on, and do you expect the weakness in this segment to continue?
So that's a good question. Basically, we see the demand across the board continuing to be buoyant. What happens is when you see a quarter numbers, you see it dependent on the launches that have happened and the availability of inventory. For example, in Provident Housing, there haven't been that many launches, and that's the reason. But if you look at in detail, the sustainability numbers have been much higher, which means basically projects under sustenance are continuing to do higher volumes, while we are adding a lot more launches we added last year in Puravankara. But in the coming year, if you look at our launch pipeline, out of 14 million square foot, almost 7 million square foot is in Provident. So you'll see exactly a very different trend in coming quarters as far as Provident is concerned. So it's more related to how much supply is there than demand. As far as demand is concerned, even this quarter and on the ground, what we are seeing, demand is looking pretty good, very healthy, and continuing to grow. So we are seeing no slowdown of any manner cutting across Puravankara, Provident, or Purvaland.
Got that. Abhishek, hi, morning. I wanted to talk about the kind of price appreciation that you've been able to witness. But before that, just to complete the picture, what you're saying is that on the Provident side, you'll have a lot more launches this year. So roughly speaking, it's a 50-50 mix, right? That I think that you alluded to. What does that mean for blended margins? Because I'm guessing the margins on the premium end are better than Provident?
Yeah, so I'll break this down for you. 14 million square foot, 7 million in Provident, about 3.5 million in Puravankara, and about 3.5 million in Purvaland. And
with Puravankara, we do have Abhishek back in. Abhishek, you were just explaining what the breakup of the top line will look like this year, and since you'll be doing more affordable housing launches, what that means for margins.
Yes, so I was on the margins. So if you look at Provident Housing or mid-income and affordable housing, the margins anywhere between 27 to 30% EBITDA. If you look at Puravankara, it would be anywhere between 30 and 35%. And if you look at Purvaland, it will be in excess of 35%. So if you look at the blended margins, you would look at somewhere between 30 to 35% as would be the general range that we would perform in, given that we'll have averaging out happening between the three. As far as the value of business is concerned, you're right. From pre-sales point of view, we will do about 50% of the sales will come from Provident, and of course the balance will come from the new launches, and the balance will come from Puravankara and Purvaland. So, I think in terms of pre-sales with 14 million square foot, we are quite optimistic that the numbers will continue to look very, very good.
Okay, you're sounding very positive on how demand is shaping up. The other space I want to ask you about is just the price hiking picture. Do you think the demand is still strong enough to push through price hikes like in the past? And also if you could break it up for the segments as well. And do you think that at this point it might come at the cost of sales, or you think the demand is still so strong that you can manage to push these through without it impacting sales?
See, price appreciation is a factor of two things. One is the market, and if you look at today, there is a clear demand-supply gap in the market. What we are seeing is that our ability as developers to bring in more supply to just catch up with the demand has been limited so far. Second is, in terms of any project that you launch, from the time that you launch to the time you complete, you normally see a general appreciation of anywhere between 50 to 70% of the price. Third is that what we are seeing today is that, and if you look at, and break it down, we are, for anything that is going to get delivered in this year and next year, we are 80% sold out. Anything that we will deliver year after next, we are 60% sold out. Anything that we are going to deliver 3 years from now, we are 40% sold out. So today, the way we are looking at demand supply gap and the inventory, and I think this price increase, as long as it is realistic and sustainable, it will continue to give momentum both to the project and the sales. And so far, with the price appreciations that we have seen, we have not seen any impact on our realizations or sales. And what we are seeing, in fact, is that it's helping us with the margins, and in fact, it's helping us with the volumes.
So can realizations continue at the kind of level that we've seen? I'm asking you because it's a big number. It's 19% rise on a year-over-year basis. Do you think that can sustain?
Look, it's also because of the mix of inventory. So, what sells and what hasn't sold also decides. So looking at just an average number may not be reflective of the correct, average realization. And if you break it down brand wise, I think we would have done anywhere between 8 to 12%, realistically speaking, in the last 1 year. And what you've seen is that some higher valued products have moved a lot more because, of course, as I mentioned, Puravankara did a lot more launches, and if you see the breakup, did a lot more business, and therefore average realizations got pulled up because of that. So it's more also a mix of what kind of product moved during the period that you see this average realization going up. But realistically speaking, I think you would expect anywhere between 9 and 12% appreciation year-on-year basis for sure, the way we are seeing it right now.
9 and 12% appreciation in pricing. Okay, it's a hot market for sure. Abhishek, a little short on time, but I just wanted to get broad contours of this AIF. I think somewhere in December last year, you folks made some investments. There was a land parcel in Chennai that was bought. What's happening now? What are the plans? And from an investor point of view, people would want to understand what's the revenue share? I mean, what's the return that Puravankara, the listed entity, makes? And how is that accounted into your P&L?
So if you look at, from the P&L point of view, obviously, it will hit the P&L only when we deliver the projects. From the revenue share point of view, the investor lands up making anywhere between 20 and 23%, 24%, mid-20s as a part of revenue share model of the fund deployed in the projects, in the land. In fact, the first one you spoke about, we are looking at launching it very, very soon. We are in advanced stages of approvals. So we are hoping and expecting that before September, we should be able to take this project to market. And the idea is really to quickly turn around these projects, and with revenue share, investors start taking home capital on day one. So the day we launch, that the moment we start collecting, part of the revenue start going back to the investors, and that's the model. So it's basically a land funding model in a manner of speaking. And that enables Puravankara to obviously scale up on the quantum of land that we can acquire. And I think so far it's been good. Once we see the launches happening, I think it will catch more momentum.
Okay, look forward to having more conversations on this to really understand how this interesting model is progressing along. Thank you very much for joining in. We're chatting with you today. Okay, that is Puravankara.